welcome to Financial Markets. We'd like to welcome you from that long but eventful weekend where we were possibly all of us underwent census, some didn't, but hopefully by the end of the week that issue will be out of the way. But coming back with updates on the financial markets in East Africa as and when they are falling due. We are seeing a lot of companies and a lot of participation from member states all around the region. We have news from South Sudan's forex reserves. We have news from EcoBank's performance and a lot to come today's analysis. But as usual, we want to start with the performance of the Uganda Securities Exchange and to see how it performed as of the close of the last week and what to expect through this coming week. As of May 9th, 2024, we are looking at the end of trading session, and it left us with a total of about 2,300,000 shares, which was corresponding to a market value of about 88,719,000 Ugandan shillings. And that is what was traded, leaving us with a market capitalization of about 20 trillion Ugandan shillings. This is an improvement in the Uganda Securities Exchange capital market capitalization, and hopefully by the end of this financial year, we shall see some remarkable results from companies within the Uganda Securities Exchange. But in aggregate, of course, we are looking at 6 Uganda Securities Exchange listed equities participating in trading, ending with 7 gainers as well as 3 losers. And the East African breweries led the gainers with a 5.25% share price appreciation, closing at about 4,544.08 Ugandan shillings, and that is per share. It was followed by Centum Investment that had a share price appreciation of 4.66%, KCB Group with a share price appreciation of 1.93%, as well as Nation Media Group with a share price appreciation of 1.59%. Now, putting our focus on the losing side, we're looking at Jubilee Holdings that came out last with an end-of-day price depreciation of 2.43% at closing at a share price of 5,061.76 Ugandan shillings per share. It was followed by Airtel Uganda that left us with a share price depreciation of 0.64%, as well as Stanbic Bank Uganda with a share price depreciation of 0.48%. Now, these companies being seen on the losing side would need further analysis for any investors that already have shares within the companies or are expecting to purchase shares in these companies to understand what could possibly have caused the share price depreciation as of the last trading day. It is already good that we're seeing activity, we're seeing trade happening within these companies, but it is also worth noting that a deep analysis is necessary to understand why the company's share price is going downhill. But looking on the company that recorded the highest volume, we're looking at Bank of Baroda, Uganda, that recorded the highest trading volume of 2.19 million traded shares. It was followed by Umeme with 85,400, Airtel Uganda with 37,477, and MTN Uganda with 32,180. Now, shifting our focus to the performance of the market indices, obviously we want to start with the all share index, and looking at the analysis, it increased by 11.36 with an appreciation of about 1.13% points to close at 1,042.64. This was obviously representing a one-week gain, of 0.65%, and a 4-week loss of 1.77%, as well as an overall year-to-date gain of 19.5%. Now, shifting our focus to the local company index, and it showed a decrease of 0.26%, with points to close at 263.76 points, and making it a 1 week loss of 0.42%, a 4-week gain of 0.29%, as well as a year-to-date loss of 2.98. But going back to a slight analysis on the losing side, would want to start with Jubilee Holdings. Obviously, Jubilee Holdings has had quite a reputation on the Uganda Securities Exchange. It is one of those companies that have always been participating in the most convincing of ways. But just to give you a brief background, Jubilee Holdings Limited is a Kenyan insurance company that has been in operation since 1937 in the East African region, and the company's operations in Uganda were revived in 1992 by the formation of the Jubilee Insurance Company of Uganda, together with Aga Khan Fund for Economic Development, International Finance Corporation, and the Development Finance Company of Uganda Limited. Now, Jubilee Insurance is one of those leading insurance companies in Uganda, and that is why seeing it on the Uganda Securities Exchange making rounds is actually a good thing. But it is listed on the exchange and has been since February 14th, 2006, and it is traded under the ticker symbol JHL, and you would find more details on that on the Uganda Securities Exchange website in case you'd want to have a deeper understanding of Jubilee Holdings stock. Now, looking at its performance as of the previous trading day, we're looking at a shares outstanding of 59.9 million Ugandan shillings, and the company itself stands at a market capitalization of 303 billion Ugandan shillings. And obviously, we're looking at an analysis from the beginning of the year, and we see the share price going up at about around February and March. That period, the share price went up all the way to about 5,900, but currently they are standing at about 5,000, and we're yet to see by the time this week closes if the share price will go lower than 5,000 or will stabilize for a bit or probably go up where it was even higher. Capital markets are highly volatile, and it is worth keeping an open eye on the performance of these entities. But going back to other companies on the losing side, we had Jubilee Holdings, and just after it came Airtel Uganda, which is also another company that is worrying funders or investors that bought shares from Airtel Uganda earlier this year. But seeing that 1,477, so seeing that this activity is also worth noting, and it is also advisable not to rush to either sell or buy into these companies without a further investigation and understanding company policies and also financial performance over the previous trading sessions or previous trading periods. We also have Stanbic Bank, which is not usual for Stanbic Bank to be on the losing side, but as of our previous trading session, we're looking at Stanbic Bank giving us we're looking at a 34 Ugandan shillings per share as of the last trading day. But looking at the previous performance of this company, it recorded about 2.3% gain over its previous closing price, which was actually 33.25 Ugandan shillings. But Stanbic Bank began the year with a share price of 32 Ugandan shillings and has since gained a 10.9% on that price valuation. This is obviously ranking it about 10th on the Uganda Securities Exchange in terms of year-to-date performance. But Stanbic Bank is also the fourth most traded stock on the Uganda Securities Exchange over the past 3 months, and we are talking January 31st to May 9th, 2024, and it has recorded a total volume of about 9.14 million shares valued at about 298 million over the period. This is leaving us with an average of about 145,000 traded shares per session, a volume high of 3.98 million, and this was achieved around March 20th of the same period. And looking down onto its market capitalization as of now, and then comments and analysis. But a deeper dive into the financial analysis of the nations is normally worth looking at because they have been in this thing. Performance. Diving deeper into 30, we are looking at total data that shows about 56% decline in volume, 38% decline in turnover, as well as a 4% decline in deals. This is leaving us with a market capitalization of 20 losers. Going directly into the gainers, we're looking at Express Kenya that led the gainers with a 9.68% share price appreciation, 0.09%. Uchumi Supermarket with Total Kenya with a share price appreciation of 3.7%. Now, on the losing side, looking at Olympia Capital Holdings, came out last, and it closed with an end of day share price depreciation of 8.45%, and this led them to close at around 2.71 Kenyan shillings per share. They were followed by TPS East Africa Serena with a share price depreciation of 5.06%, as well as East African Cables with a share price depreciation of 4.04%. We also have Crown Paints Kenya with a share price depreciation of 3.27%. Equity Group Holdings recorded the highest volume in Cooperative Bank of Kenya with 982,000 and KCB Group with 575,300. Now, that is an analysis from the most outstanding equities in the previous trading session. But obviously, you'd want to understand the performance of the market indices as well to see how investors reacted and how it affected the economy and the performance of other entities and why they are not listed in gainers or losers or even any volume in trading as per the last trading session. And obviously, we want to go straight 1.3% appreciation with points to close at 106 or 106.48. This was representing a 1-week gain of 1.51%, a 4-week loss of 3.04%, and an overall year-to-date gain of 15.6%. That is actually some remarkable performance in terms of year-to-date gain. And other remarkable indices that performed on the Nairobi Securities Exchange included their 10-share index that had a 0.77% appreciation, and looking at a 0.85% appreciation in terms of 1 week, and 19.77% appreciation or gain in terms of year to date. We're looking at the 20-share index as well that gave us a 0.07 appreciation, as well as a 0.04 1-week gain and a 10.59 year-to-date gain. The 25-share index also performed pretty well in our previous trading session with a 0.64% appreciation, a 0.54% 1-week gain, as well as a 17.28% year-to-date gain. Now, shifting our focus to Express Kenya, just to give you a brief outlay on this entity, and seeing that it was the best, the top gainer on our previous trading session, would want to understand what is this entity really. But Express Kenya Limited is a Kenya-based company that is engaged in the provision of clearing and forwarding services of air and sea, as well as warehousing and logistics services. They're all into this transportation, importation and exportation of various goods. But it operates through 5 divisions. We're looking at sea freight, air freight, packing and removals, transport, as well as warehousing. The company has a fleet of over 80 movers, including trucks, small vans, trailers, low loaders of up to 80 tons capacity, as well as side loaders, cladded stainless steel tankers, and forklifts. It manages warehouses of a total of 50,333 cubic meters and provides over 40,000 cubic meters of covered secured space. Now, Express Kenya Limited operates through subsidiary companies, including wholly owned Express Mombasa Limited, Container Services Limited, and Airporter Limited. The ultimate holding company of Express Kenya is Edcovel Holdings Limited. Now, they're listed on the Nairobi Securities Exchange with a ticker symbol of XPRS, and for more information on their identification numbers and codes, you can also visit the website to further understand how the company holds its place on the Nairobi Securities Exchange. Now, in our last trading session, they closed at a share price of 3.06 Kenyan shillings per share on the Nairobi Securities Exchange, recording a 9.7 gain over its previous closing price of 2.79 Kenyan shillings. Now, Express began the year with a share price of 3.70 Kenyan shillings, and it has since lost about 17.3% of that price valuation, ranking it the 59th on the Nairobi Securities Exchange in terms of year-to-date performance. But obviously, they are still up there, and we're looking at them in the 40th most traded stock on the Nairobi Securities Exchange over the last 3 months, and it has traded over a volume of over 247,500 shares in about 78 deals, valued in about 809,605 Kenyan shillings over the period. This is leaving us with an average of about 3,929 traded shares per session and a volume high of 64,600, which was achieved as of May 7th of the same period. Now, that was Express Kenya, and we're seeing it as actually, it was one of the top gainers but has lost some value over the year. But we can be sure that this company is not going anywhere, and obviously, there might be some ups and downs within the economy. There might be internal factors, there might be external factors, and this is why every investor ought to look deeper and make a detailed analysis of these entities before investing or before even pulling out, and not to chicken out and miss on the various profits that could come up in case of any changes made. Now, focusing on one of our losers on the Nairobi Securities Exchange, would want to look at the biggest loser, which was in this case Olympia Capital Holdings. And as of the previous trading session, they closed with a price depreciation of 8.45%, and would want to also understand what does this company do, and how has Kenya's current financial environment affected this company's performance in accordance to our previous trading session. Now, Olympia Capital Holdings is a Kenyan-based holding company, and it's actually into investments and makes company deals in the manufacture of sales products used for construction. And here we're looking at floor tiles, we're looking at adhesives and PVC windows, door frames, cleaning chemicals, fire prevention equipment, water pumps, to mention but a list. But it is a subsidiary of and affiliated companies that include Dunlop Industries and Olympia Capital Corporation Limited. We're looking at Kalahari Floor Tiles, Gaborone Enterprises Limited, Avon Rubber Company, and Martha and Platt Limited. And it is listed on the Nairobi Securities Exchange under the ticker symbol of OCH. And of course, more information on their identification symbol and number will be found on the website. But looking into the numbers, they closed the previous trading session with a 2.71 Kenyan shillings per share on the Nairobi Securities Exchange, recording an 8.4% drop from the previous closing price, which was 2.96 Kenyan shillings. Olympia Capital began the year with a share price of 3.27 Kenyan shillings and has since lost about 17.1% of that price valuation, ranking it 57th on the Nairobi Securities Exchange in terms of year-to-date performance. And shareholders, of course, have no worries because they're compounded by the fact that this company has actually lost 23% of the stock's value from April 9th to date. And Olympia Capital Holdings is the 39th most traded stock on the Nairobi Securities Exchange. That has been so over the past 3 months, and it has traded a total volume of 380,800 shares in about 124 deals valued at 1.05 million Kenyan shillings over the period, leaving us with an average of about 6,044 traded shares per session and a volume high of 216,900, which was achieved on May 3rd of the same period. It is really important to keep an open eye and understand the movement of these numbers and how they affect your investment. On their listed securities exchanges in East Africa, we're looking at headlines like Uganda Airlines leasing aircraft to up operations, as well as Absa Kenya betting big on mass market for growth. We're looking at a lot on the finance side happening within Kenya, and also looking at East Africa trades more with trading more with East African peers than the European Union or Asia itself. But one of our first points of focus as of today were EcoBank closing. EcoBank showing us $183 million in impairment losses, underscoring risks in sovereign bonds. Now, of course, EcoBank, being a Pan-African group, has more than doubled its impairment losses in Ghana's distressed Eurobonds to about $183 million. And it is the underscoring extends the risks that African lenders are facing in their investments in sovereign bonds. So the loan-based lender says it also excluded about $39 million in interest coming and on the $13 billion Ghanaian Eurobonds from its 2023 financial statements, owing to the ongoing and yet to be concluded restructuring discussions with commercial bond holders. Now, obviously, news like this is bound to affect EcoBank and all its other subsidiaries scattered all around Africa. And as financial markets, we are here to give you information on everything as it goes down with the Eurobonds performance, obviously in West Africa, but also how it is bound to affect the performance of the financial entities within Uganda as well. But just to give you a brief insight, Pan-African Banking Group, EcoBank, has more than doubled its impairment losses on Ghana's distressed Eurobonds, as I have stated earlier. But we're looking at $26 million of modification losses that were incurred on the GOG debt net of impairment charges, and it releases, and the releases are due to the final statement of the old bonds for the new bonds in February under the domestic debt exchange program. Now, EcoBank has operations in about 35 countries, including Kenya, Burundi, and the Democratic Republic of Congo. We're looking at Ethiopia, Ghana, and Cote d'Ivoire. So, global rating agency Moody's Investor Service has previously cautioned banks against excessive lending to governments, saying their credit profiles risk being downgraded in tandem with those governments facing liquidity pressures. In March, Zambia reached an agreement with its creditors to restructure $3.5 billion in Eurobonds, coming as a sigh of relief to Lusaka, which is battling a prolonged debt crisis. As part of the deal, bondholders agreed to extend payments and this is allowing Lusaka to continue receiving funds under a $1.3 billion International Monetary Fund program. So this also comes as a warning from this analysis that banks should watch out as they prepare to give governments, to extend funds to governments in terms of loans or in terms of any kind of financial instruments, especially governments that are undergoing liquidity pressures, because you can find yourself affecting, or these banks can find themselves affecting their own credit profiles due to failure of these governments to fulfill their promises. Now, focusing more on what is happening within East Africa, would want to look at Kenya and their focus on Absa Bank Kenya and their focus on the market growth, on big mass market growth. This is obviously bound to affect Absa's performance in East Africa at large, including the branches that operate within Uganda itself. But just to give you a brief insight on this headline, Absa Bank Kenya is refocusing its resources towards strengthening the retail business, as competition for the low-end part of the market depends among lenders seeking to grow profit margins and expand customer base. So multinational banking giants, which previously thrived on doing the business, corporates and high net worth individual clients have been tweaking with operating models in favor of retail customers. We have opted to pursue upscale as a strategic approach, as opposed to serving a niche customer base, and that is what Absa stated in their largest integrated annual report. Now, over the years, Absa states that they have built a strong franchise that was focused on niche customers with specialized products and services that were tailored to their needs. But their focus will obviously cascade their capabilities to pursue a wider breadth of customers than usual. And this new approach is bound to result into greater focus on mass markets and also build their portfolio in the process. So this is supposed to be good news for investors in Absa as well. We haven't seen any performance in our previous trading session from Absa Uganda, but neither have we seen any performance from Absa Kenya. But we shall see as the week transpires to further understand how this move is bound to affect the performance of these entities. So another headline that deserves analysis is inflation still leaving a bitter taste for the East African community's governors. And this inflation also affects the performance of currencies, as well as the trading of stocks on the securities exchange. So just to give you a brief insight on this headline as well, would want to further understand how these governors have faced it in the previous performance of these currencies due to the inflation that has obviously hit East Africa from all angles in a way that is bound to affect the movement of these funds. So central bank governors in East Africa, in the Eastern Africa, are actually worried about how strong dollar continues to cast a long shadow over their local currencies. And the governors were forthright about the headwinds that are buffeting their respective economies. So Mr. Adam Mugume, the Director of Research and Policy at the Bank of Uganda, represented Uganda at 27th East African Community's Monetary Affairs Committee Conference in Juba, and he talked about Uganda's dwindling forex reserves, putting the country in a precarious position. Well, Dr. Mugume stopped short of decrying events that have led to the shrinking of external budgetary support that has been a traditional source for replenishing the reserves. The Burundi Central Bank governor called for a paradigm shift, and Mr. Edouard Normand said the East African states should wean themselves to external borrowing. He said the concessional loans make them susceptible to foreign economic interests, and in the advice given to us by the international financial institutions, what we hear is the same message. We have to devalue, and probably all the central banks are facing the same, he noted, adding that we don't need to dictate on what we need to do, because he believes that there are many options and ways these central banks can come up with funds. So according to Mr. Bigendako, East African countries need to strengthen cooperation and collaboration among themselves as policymakers to address communities' issues and ensure the achievement of their common objectives. Now, the economic performance of East African states faces various challenges and threats. These include current amount deficit deterioration and the fiscal deficit widening owing to persistently low domestic resources mobilization as well as increased spending. Now, that headline has a lot of insights and helps us to understand how the government, how the central bank itself is taking the situation, including the presence of inflation and how it is affecting liquidity. Now, obviously, liquidity affects performance of financial markets by far. So looking into these headlines would also help you understand why your entity could possibly be performing the way it is, and that is in terms of external effects. But putting our focus back onto financial news within East Africa, we're also looking at the East African cables to sell its Tanzania unit at loss. Now, obviously, this is a headline because the losses are bound to affect investors, and we could be seeing the start of a dissolution process. We could be, but let's keep an open eye to see how that ends up. At least by the end of the week, we shall know what is going on in Tanzania in terms of East African cables. But South Sudan forex reserves are also hitting a historical low, and this is also happening after the meeting or the summit that was held in Juba by the director of research from Bank of Uganda, and their discussions on inflation. But the Bank of South Sudan expects more inflationary pressures and weakening of the South Sudanese pound as a result of the continuous decline in forex reserves, highlighting the depth of the economic woes facing the nation ahead of the general election scheduled for December this year. Juba is actually grappling with a shortage of dollars as a result of declining revenues from oil production, the nation's chief revenue earner, on depleting wells and military conflict in the neighboring Sudan. So the Bank of South Sudan Governor James Alik Garang says oil reserves are at historic lows, and the levels as a result of geopolitical tensions, including the raging conflict in neighboring Sudan and the Israel-Hamas war. So Dr. Garang says the loss of reserves have huge implications for the country's balance of payments, with consequences for currency depreciation and high volatility manifested in prices of goods and services. So geopolitical tensions, including the raging war in neighboring Sudan, have affected their pipeline to Port Sudan, and the Hamas-Israel war has disrupted the major trading route in the Gulf of Eden. So where shipment of our crude oil takes place, posing a challenge, where shipment of their crude oil takes place and this is actually posing a challenge to South Sudan's economic outlook. So Dr. Garang mentioned all this in the 27th Ordinary Meeting of Monetary Affairs Committee of the East African Community that was held in Juba. Now, that is all in terms of highlights that we had from financial markets and the news around the East African markets that is very important to the performance of these financial markets. It is only the beginning of the week. We're yet to see a lot happening on the Uganda Securities Exchange itself and the Nairobi Securities Exchange, and it is also worth looking into securities exchanges from other parts of the continent, like Johannesburg. We're looking at the Nigeria Securities Exchange. It is also good to look through and get some insights on the performance of entities. It is also worth noting that looking into these cross-listed entities is also helpful in understanding the performance of the company in reaction to the financial environment of both of the different states that these companies are listed in. So hopefully by tomorrow we shall be seeing a lot more insights from the top gainers and the losers, and hopefully financial reports from these companies to give investors hope and a better understanding of their performance. I have been your host, Victor Chiberu, and we will meet tomorrow.
Smart 24, driving business.